Is the emotional pain of the ups and downs of day trading getting you down? Well, there's a better system. And in this video, I'll show you exactly the 3 methods of SPY T trading and what will make you a successful overnight swing trader. I'm in awe of great day traders, but unfortunately, less than 10% of them make money consistently. You may have noticed something really important, and that is that most of the action happens overnight. And you were right. Here's your proof. Pause to take a look at this graph. ETFs, exchange-traded funds, such as SPY, are an excellent way to build wealth. And if you started buying SPY in the morning and sold it in the evening every day since its inception, you would have lost money. However, if you bought it at the end of the day and sold it in the morning, you would be up about 600%. Now, obviously, day traders don't buy in the morning and hold until the market close. They navigate the market through the ups and downs throughout the day, sometimes moment by moment, which of course can be emotionally painful. So with so many opportunities overnight, we look at the overnight swing trade to take advantage of that opportunity, which also lessens the amount of the ups and downs of moment-to-moment day trading. Now, day traders do have one obvious advantage over overnight swing trading, and that is the ability to place stops, to protect themselves, allow them to protect their gains and limit their losses. So what can we do overnight for insurance and a little bit of protection? And this is why I like SPY T trading. Now, there are 3 parts to this trading system. First is the time. An overnight swing trade. We buy at the close and we sell in the morning. And then we amplify that opportunity using options. But of course, we protect ourselves with a 2-to-1 option ratio, which I'll explain more in a moment, because there are 3 ways you can go about it. And then lastly is the signal. There are many different signals you can use. You can use your favorite signal. I use the SPY Tomorrow signal, which of course is free over at spytomorrow.com. Now, with that overnight swing trade, you could go directional. Just buy a call if your signal says up, or a put if your signal says down. And if you do that, make sure you're very conscious of your position size. Don't put a lot of money behind it, because if it's wrong, you could easily lose 50 or 70% of your money. You could also consider a straddle, which buys both a call and a put. However, with such a short-term trade, it often doesn't produce really good gains. As I mentioned, there are 3 2-to-1 option ratio approaches that I do recommend, and I'll show you what those are. However, I have to warn you, there is a 4th that may be tempting, but I highly recommend you don't do it. I'll show you that in a moment. The first approach is what we refer to as SPY TA. Now, it's for your more aggressive traders, not as aggressive as going directional, just buying a call or a put. There is a protection element. And yes, you can make more money, but you could lose a little more money too using this approach. What you do if your indicator says up is buy 2 calls at a specific strike or price and 1 put. So if the next day opens up, both your calls make money, your 1 put will lose a little bit of money, but ultimately you end up ahead. Now, if the market didn't go your way and went down, that put would gain in value as your calls went down in value. So you wouldn't lose as much money as you would have if you just went directionally. And you're protected, because if the market completely crashed, that put would eventually be worth more than those 2 calls. And you guessed it, the next one is SPY T B. If your indicator said up, and you would buy a call at the money and then find a put about half price. And my personal favorite is SPY TC. In this situation, we go a little deeper into the money, looking for a call next to a put at the same strike price that again is about half price. SPY TA certainly is the more expensive option. SPY TB and C are about the same. However, SPY TB is a little riskier and not as easy to handle as SPY TC. Now, what about that one I don't recommend? I guess you could call this one SPY TD. D for don't. You may have heard of straddles and strangles. A straddle is when you buy a call and a put at the same strike price. But you can also buy calls and puts out of the money at similar prices, and that's referred to as a strangle. You can kind of do the same thing with a SPY T trade. However, I don't recommend it. The thing is, with the other SPY T trades, you can probably make more than you would lose, or maybe about the same. In this situation with the SPY TD, you can often lose more than you would gain on the good days. So sometimes when volatility is really high and we find that premiums are pricing us out of the traditional SPY T trades, we may be looking at that SPY D trade because it's less expensive. But it's also so much more riskier that I would just say don't trade at all and wait for those premiums to come down, or do a directional trade at a very small position size. We've mentioned our time frame, overnight, and our 2-to-1 option ratio. But what about the signal? What signal are we using to determine up or down? Based on the charts, we know that our signal needs to be over 55% correct to be successful. And of course, I prefer my SPY tomorrow signal because I spent 2 years creating it. Plus, it's over 75% correct over the long term. And of course, some months it's well over 80% correct. In some months it's in the 60s, and I'll explain why in a moment. But you don't have to use the SPY tomorrow indicator. You could use it in combination with others, but you could also look at the last tick of the day, see how that correlates with the next morning open. Maybe you can look at the option flow. What's the big money doing? What do they think is going to happen? Compare some of your favorite technical indicators at the end of the day and how the next morning opens. What about price action and volume at the end of the day? Is there a correlation to how the market might open the next day? What about key stocks such as Apple and Google? They're a big part of the SPY and QQQ ETFs. Maybe they have a correlation to how the market might open the next day. Of course, the kryptonite for any one of those indicators is news, economic news, world news, market shifting news that can point the market in the opposite direction of the indicator at the close. And the SPY tomorrow indicator? It's not immune to that either. It measures what we refer to as the pressure of the market at the end of the day, and that tends to correlate to how the market might open the next day. Yes, you will have to learn some skills for your SPY T trading. You have to buy an option at the close and sell it at the market open. And the thing is, you can give 10 different traders the exact same information and have 10 different results. And that usually doesn't happen because of when they bought the option or stock, it's when they sell it. That's where the skill comes in. And over time, you'll get better at extending your wins and minimizing your losses. Definitely have goals for your trading, but don't judge your trading by the day-to-day wins and losses. Look at your trading over a week and a month and make adjustments along the way. Patience and consistency is what makes a great trader. Let your winners run and cut your losses short. Unlike day trading, which has lots of opportunity to make mistakes and let your emotions get the best of you, overnight swing trading has a buy and a sell, leaving us less opportunity to make those fatal mistakes and let emotions ruin the day. I often recommend you have a specific trading account that has limited funds that will only allow you to trade what you can afford to lose. Day traders love SPY options because they're highly liquid, easy to trade, and it's the same for us when we're doing an overnight swing trade. If you don't want to fill up your days with the pain of day trading, well, definitely consider SPY T trading and check out the next video that explains even more. Hey, I'll see you in the next video.